August
Yes.
2012.
Yes.
So you mentioned that we're seeing shrinking inventory. You have some foreclosure data, and median prices are down a bit. So tell us what's happened in the last.
Well, okay, I think the big thing is that inventories are shrinking, and the reason inventories are shrinking is because we're seeing transactions continue at a really nice rate. 2012 has clearly been the year when we've started to do this. For the last 5 or 6 years, we've been trying to figure out, are we at the bottom, are we at the bottom,
Right,
are we
right.
at the bottom? And as you know, our median prices have always been pretty firm, and they remain pretty firm, but our transaction volume was way down. And this year, transaction volumes are up. So far this year, they're up about 25% really in the whole region, including Dane County. And so that's really a good sign. And because transactions are up and the number of new listings to the market remains at about the rate it was last year, we're seeing inventories come down. We should, if at present, currently we're at about 7 months of inventory for single family if you take the sales for the last 12 months. But I think at the rate we're going, by the time we get to the end of this year, we should be at 6, maybe even a little below. That's a balanced market. So that looks really, really good to us, and we're very, very excited about it. You mentioned prices. We have seen a little bit of a dip in the median price this year that I think has been a little more noticeable than in some years. But we also, with medians, you also have to remember the way medians are constructed. You take all the sales, and then you take the one right in the middle, and that's the median. And if most of the sales are in the lower end of the price spectrum, then you're just going to pull the median down. And we've seen that about 2 or 3 percentage points more of the sales are happening below 200,000 than above. So that implies that there's more activity at the lower end of the price spectrum. And that's good, because the way that a housing market starts to get going again is first-time buyers have to come into the market, release the equity for the other buyers to move up.
Right.
And so that's all occurring, and we're feeling very optimistic. There's a clear energy in the market this year that we haven't seen for 5 years now, and it's been fun.
Wow. So buyers have a more difficult task than today. Is that what you're saying, maybe?
Well, more difficult, well, if you mean is it as strong a buyer's market as it was? No, it's not. In fact, it's almost a fair fight now. whereas a few years ago, it seemed like the buyers had all the leverage.
Right.
We've seen a lot of situations where buyers had to overbid for properties.
Wow.
That was especially back in April and May. We were seeing it common. The property would come on the market, 2 or 3 offers would come in the first day or two, and buyers would have to compete. It almost became an auction environment. So that's been a lot of fun to see. The other thing, of course, that's contributing to this is we continue to have extremely low interest rates, and they just keep going lower.
Right.
Yeah, we could go on all day about why that's true, but the fact of the matter is that this is an environment where the combination of very favorable pricing and low interest rates, which we've had for many years,
Yes.
but it continues, and I would say probably against the expectations of some, including myself, we kept thinking they're going to go up, they're going to go up, they're going to go up, interest rates, and they just keep not going up.
Right.
So I give up. They're going to stay low for a while. As soon as I say that, maybe that's what's going to make them go up. They will eventually go up. There's no doubt about it. Nobody disagrees with that. They have to go up. But we're in an extraordinary environment right now, so it's an opportunity for home buyers.
So then sellers have maybe a little better outlook. Is that the case?
Yeah.
these days?
Yeah, at least if we still have enough inventory, depending on the neighborhood you're in and the type of house you have, that we're not in an environment where you can just start asking for an aggressive price and the buyer will come in and say, oh, okay, I'll take it. You still have to be priced properly and really ready to go. You have to compete because they still have a lot of choices, buyers do.
Sure.
But it's not quite as severe. You don't have to just cut off your right arm in order to be able to get to that point. And if you are there, if you have a good property that people really want to buy, it can happen pretty quickly. You had mentioned in your first remark foreclosures,
Right. I was gonna get to
and let me just comment on that briefly. The MLS has finally given us some good data that allows us to really track what percentage of the market is foreclosures. And to make a long story short, in Dane County, we're seeing just under 10% of sales are owned by the bank. Which is lower than a lot of people.
Right.
A lot of people are saying 20, 30%. It's not that much. It's more like about 10%, which is closer to what we thought. And maybe another 2% are short sale, meaning that they're selling for less than the bank owes. Right. So you have those two dynamics going on, but what we're also seeing is that foreclosure inventory is kind of becoming its own thing. Because a lot of those properties, unfortunately, are in rather poor repair. They haven't been lived in for a long time. They haven't been taken care of. So a lot of those are being bought by investors, fixer-uppers, people like that. Whereas the regular home buyer that's just looking for a place to live is very willing today to pay market rate And so if that, once that distressed inventory, if that continues to dwindle down and get through the pipeline, we could see a very active market next year if it stays like this.
And how about renters? Rents seem to be, I mean, I keep seeing.
We have the
new
lowest
renters,
vacancy. We have the lowest
going up.
vacancy rates that we've since we've been keeping track of it here in Dane County. Yeah, they were measured in the first quarter, I think, at like 2%, which is in the region, which is really low. I mean, there's just very little to find. So it's putting upward pressure on rents. As renting gets more expensive, owning continues to
buy a
look
house,
even
right?
better. So, or you buy income property and you rent it out, and you can rent it out at today's interest rates at a positive cash flow if you do it right. So all those are opportunities for people. So yeah, the housing market, we've been saying this for years, but people seem to now finally see it. The housing market presents a really compelling opportunity.
Sure. And what about the outlook for the rest of the year, Dave?
Well, so far this year has followed a very normal seasonal curve, the most normal we've seen in 5 years. There have been all kinds of shocks to the system, it seems, every year. This year we have no shock to the system, so we're seeing a very normal seasonal curve. And if things continue the way they are, we should end up in Dane County again with somewhere between 5,500 and maybe 5,700 sales. That'll be up from about 4,600 a year ago. So that's a pretty good increase. That's a good 25% increase. Probably better than a lot of us hoped it would be. So that's encouraging. And so far we're seeing no indication that that's slowing down. July offers to purchase have continued to come in at a nice rate. August is just starting, as we say, so we'll see how that goes. We always see a seasonal dwindling, and we're of course seeing that. But our projections for what we hoped we could do for these months has been good. If it continues, this should be a real strong year.
Great. Well, thanks, Dave. We'll talk again in October.
Thank you.